What is today's scenario of the world's financial market? Bitcoin just crashed 20%, and traders across the US, Europe, Japan, South Korea, and other Western market all are asking one question: Is the bull run officially over? You are watching Civic Finance. In today's commentary, I break down what caused the sharp drop, what it means the cycle, and how smart investors interpret this pullback. Why this drop scared everyone? Everything was all right. Traders were happy. For weeks, Bitcoin moved almost straight up. Social sentiment was extremely bullish, and millions of new traders jumped in. But when momentum shifted, it flipped the market instantly, creating widespread fear. And obviously, there are some reasons why it happens. We have found out some reason. Let's discuss about this. Cause number one: extreme leverage. Too many high leverage longs. Liquidation cascade. Automated sell off amplified the drop. I think my friends who are trying to start these types of business or who are already existing in these types of market, they should keep mind, they should note the points. The number on cause was leverage. When prices dipped even a little, over leveraged position started liquidating automatically. That created a chain reaction. On liquidation triggered the next like the domino effect. Cause number two: early investors taking profits. Smart money sells into strength. Mind it. Early entries lock in gains. Increased selling pressure. Other follow the selling trend. Very important these 4 points. Next, early cycle investors began taking profit. Smart money never waits for the exact top. They sell into strength, meaning they start exciting when prices are still rising and demand is still healthy. Here is a simple example. Imagine a group of early investors who bought, or even you, bought Bitcoin for around $40,000. When the price surged to 55,000 or 50,000, they didn't wait for it to hit 60,000 or $70,000. Instead, they sold some of their position to secure guaranteed profit. As these early investors sold, more supply enters the market, and when others noticed the increasing selling volume, they copied the move. This profit taking wave added steady downwards pressure, helping accelerate the market decline. Cause number three: macro pressure. US macro data shifted. Risk of environment. Bitcoin reacted quickly to rate expectation. Then macroeconomic data from the US changed investor sentiment. Whenever interest rate expectations shift, risk assets, especially crypto, tend to pull back quickly. Cause number four: AI trading models. AI system flipped bearish. Momental algorithm triggered sell. Speed of crash accelerated. Let's discuss about this. AI driven trading system also added fuel. When momentum turned negative, this algorithmic model automatically issued sell signals, which accelerate the speed of the drop. For example, once the price fell below a key moving average, many AI powered strategies interpreted it as a trend reversal and simultaneously triggered large sell orders. This created a chain reaction. One wave of automated selling pushed price lower, which then activated even more algorithmic sell signal. Historical pattern: 20 to 30% dips occur every cycle. 2017 multiple 30 to 40% drops. 2021 big corrections before new lights. Believe it or not, 20% corrections is completely normal in Bitcoin bull market. In 2017 and 2021, Bitcoin corrected 30% or more several times before hitting new highs. On-chain signals remain strong. On-chain metrics don't show panic. Long-term holders are steady and exchange balance remain low, meaning people are not rushing to sell. Why corrections reset the market? Fear replaces greed, shakes out weak hands, and set up next move. I think all the bull points are remarkable. You should remark it. These corrections reset the entire market structure. They shake out overconfident traders and create room for higher growth or healthier growth. How AI models interpret this drop? Let's discuss about this. Momentum cool down, sentiment reset, no long term breakdown. From an AI perspective, this was a trend cool down, not a collapse. Many models treat dips like this as accumulation zones, not exit points. For long term or passive income investors, dollar cost average, avoid leverage, stick to allocation, US AI as tool not guarantee. For long term investors, strategies like DCA still make sense and it is relevant. Staying disciplined protects your portfolio from emotional reaction. What could happen now? Be hopeful, never be hopeless. Mid cycle correction likely. Structure is still bullish. Recovery possible once fair stabilize. When we put everything together, this took like a mid cycle correction. Nothing so fair indicates the bull run is finished. Key takeaway: 20% drops are normal. On chain data is down. A model is still optimistic. Bull run likely intact. The crash feels dramatic, but historically it's normal. On chain signals remain strong and nothing to be hopeless. And the larger trend hasn't broken. Stay informed. If you found this analysis helpful, hit subscribe and leave your thoughts about where Bitcoin is headed next. This video is for educational only. Always research before investing.